Good morning, good afternoon, good day. Welcome to my weekend market recap, 6th November 2021. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use. They work as add-ons on the Metastock and TradeStation platforms. That was the last slide. Let's continue with the live system. First, have a look at the global markets, starting with the Australian index, all ordinaries, AORD. 1 week ago, the backdrop color was bearish. This daily candle was also bearish in flow color, so I expected price to come down, but it didn't do that. Instead, price went up this week. Stopped right at the trendline resistance. Even if we took a short trade, go with flow short trade in all ordinaries, our stop has not been hit yet. Most probably you would not short the index itself, you would have shorted some individual stocks, but just for the analysis, if we took a go with flow short trade on this day, that was in fact Friday, 1 week ago, we are still in the short trade because stop has not been hit yet. If next week price goes up little bit more, it will hit the protection stop loss, which is somewhere here. On the other hand, if price can come down, then we will like to book profit probably at this trend line support. Currently it is inside a triangle pattern formed by multiple trend line resistances and multiple trend line supports. I am taking the Q master classes now. In the current session, I am describing the last session I had yesterday. I think I described the individual technical signals, and the more you study these charts, the more you see how the different indicators are coming together. If you look at all ordinaries and combine the insight from all the indicators, our conclusion will be that yes, we have weekly bullish candle in color shape, but daily does not allow us to buy because it is right at trendline resistance, at which point multiple indecision signals and bear release came earlier. Also, Friday's candle shape is indecisive, so it does not allow us to buy. For swing trading purposes, all ordinaries is moving sideways. Japan Stopics Index, we have indecisive shape candle in the weekly chart. On Friday, we have a bear release signal. So on Friday, we don't have any trade setup. For swing trading purposes, it is going in an uptrend with higher low. We know higher low from the trend line support, and it has higher high as well. The swing low was at this point. It is already some distance away from swing low, and on Friday we have bear release signal indecisive shape candle, so we'll not like to buy on Friday. Where can be the next trade setup? We may get ready for trade setups by observing how price is moving. Currently it is in an uptrend and there is a trend line support. So I will be happy to see price coming down to the trend line support or maybe to the yellow direction line and going up from there. That will give the next trend following go with flow long trade setup. What if price continues to go up from here? Then we'll already be above the upper boundary level, that is too extended from the recent swing low to take any long trade. That is how we can read the different indicators and get ready for a trade setup. And if the trend line support go with flow long trade happens in future, we'll have everything ready to trigger the trade. What instrument to trade, how much quantity, everything will be ready with. Topics in an uptrend but no trade setup at present. China's CSI 300 forever moving sideways. It seems not really forever but for very long time moving sideways inside the triangle pattern. There is no trade setup. UK's FTSE index, it's also moving sideways. It has trend line resistance, trend line support in a kind of triangle pattern, and you may also say it's in a box pattern, very wide triangles moving sideways. And lastly, India's Nifty 50, when it displayed the bearish headwind in the weekly interval, we were cautious. Since then, price has come down little bit. Backdrop color is remaining magenta, bearish. However, there are multiple trend line supports in the weekly. Still some distance away from Friday's close. So we may be able to take short trades in individual stocks if price comes down next week. Will still be significant distance away from the Nifty trend line support, so we'll be able to take the short trade. In the daily, it is currently in a downtrend. We know that from the trend line resistance showing lower high and we have lower low. Price has picked up somewhat from the recent swing low. It is near three direction lines, magenta, cyan and the light blue color, three direction lines coming together. If now price comes down, those three lines will diverge. It will fan out in the downward direction. Weekly is already in magenta color. If daily gives a bearish flow magenta candle, we'll have the next go with flow trend following short setup. For swing trading purposes, it is in a downtrend. That was a look at the global markets. We don't have clear idea from the global markets. Some are moving sideways like UK, China, India moving downward, Japan is moving upward. Mixed picture from the global markets. Let's now have a look at the USA market. USA market is very strong. This is SPY, made a new all-time high this week. In the daily, after the swing low, which happened with very bullish signal, the biggest up move in 3 months happened around this area. Right from that biggest up move in 3 months, price has gone up almost in a straight line. This biggest up move in 3 months happened when price was already at pendulum high. I'm taking the master classes, and I mentioned in the master classes that if biggest up move happens at pendulum high, does not mean always that it is exhaustion. Price may continue to go up, and that has happened for the USA market. SPY has straight gone up after the biggest up move of 3 months, which happened at pendulum high. Interestingly, other than this biggest up move of 3 months, very bullish intensity signal, we had the very unique bullish headwinds, two of them right at the bottom. Price could never go below that price level. These reversal signals once more came in very handy in anticipating a turnaround, and then we had a, you can say, a follow through day when the biggest up move happened. Now it is well above the upper boundary line. It's overbought for many days, shown by the stretch band indicator. So we'll not like to buy, enter a new long trade. If we already bought earlier, then we may continue to hold those long positions. That was SPY, and the picture is similar in other market ETFs. QQQ, well, there is some warning signal. I am doing it live. I am seeing the warning signals and the bullish signals along with you. The weekly made a new all-time high. Very bullish picture. Here also the up move started after the biggest up move of 3 months, very near pendulum high, or at pendulum high, you may say. Price has gone straight up, but I see a cautionary signal on Friday, which in fact made a new all-time high, at least on intraday basis. On closing basis also it made a new all-time high. I see Friday's activity bar is green, so Friday's close was higher than Thursday's close. Thursday already made a new all-time high on a closing basis, so Friday, though from open it came down, on a closing basis it made a new all-time high. What is the cautionary signal? It has the bearish headwind, possible reversal signal. We saw in SPY how the headwind reversal bullish signal came somewhere here. That was in SPY, two of them. We have the opposite bearish headwind signal at the top now. That's a cautionary signal. It may lead to a turn down. If we look at the weekly interval, the previous time when a bearish headwind came, or even the one before that, they worked pretty well on QQQ weekly interval. Price dropped significantly from those bearish headwinds. They work often and they work quite well. That's why whenever a bearish headwind comes, we are cautious about existing long positions. Is there any bearish headwind short trade setup? No, that is not there. If we apply the unambiguous checklists, the weekly is not meeting the checklist condition. Weekly should be in yellow color or with a bearish shape candle for taking a headwind bearish reversal trade. That is not true. The weekly is not meeting the condition, and also daily has a trend line support nearby. That will be another reason not to consider any bearish reversal trade right now. However, if we have long position, the bearish headwind is telling us to be cautious and protect profit in those long positions. Also, if we see the jump thrust, jump has hit the cyan color, the most extreme level. Thrust has not hit the most extreme level yet, but jump has hit the most extreme level. That is also telling us that it is very extended or overbought. What about Dia? Dia also made a new all-time high. There is some cautionary signal. Thursday we had an indecision at the top. Friday also has an indecision at the top. When indecision at the top is happening at all-time high, it's always good to be cautious. It's not bearish yet, but I will not be surprised if this series of indecisions lead to at least a moderate pullback. I will not take a short trade based on that expectation, but if that pullback happens, I'll be ready to take a short trade. For now, it is very bullish, but indecisive in the daily chart. Indecisive based on Friday's candle. And lastly, small cap IWM ETF. For a very long time, it was range bound. In weekly, it was between the resistance memory and support memory. This week, it ferociously broke out of that range, made a new all-time high after a very long time, made a new all-time high in IWM. However, here also I see the warning signals at all-time high, a series of indecision at the top. Of course, I am not going to buy. It is already far above upper boundary. It's overbought. Not going to short yet, but the indecision at the top, these signals are telling me that there is a possibility price may pull back. I'll keep an eye for that. For now, it is bullish but indecisive in the daily interval. So USA market is different from the global markets, is much more bullish. Let's see if that bullish view remains when we look at the market from other angles. Let's start with QH sector industry stock advance decline 1 month to 1 day. All the periods are very bullish now. All the periods is very green. Sectors are certainly green throughout. So are the industries, and even at the granular stock level, all the periods are pretty bullish. This is bullish, but this may also be showing overbought condition, extended condition. And if you look at the sector performance over 3 periods, 5 day, that is the current week, all the 11 sectors are up. 2 weeks, 10 days, 10 sectors are up, one is down. Which one is down over 10 days? That's green bar, energy, and it is down by a small percentage. Over 1 month, again, all the sectors are up. So when we look at the bar charts of all the sectors over 3 periods, we see it is very bullish, and this may also be showing that it is bullish for a long time. It is probably time to be cautious with long trades. It is not a time to take new long trades. Individual stocks may have buy setups. I will probably show you one such stock, but it is bullish for so long that it is probably too overbought to take new long trades. At least too many long trades I will avoid taking now. That is the conclusion from sector industry stock advanced decline study. And let's look at the bucket analysis. If we look at the percentage of stocks in the uppermost bucket, that's above upper Bollinger Band for S&P 1500 stocks, that percentage is at 28.3%. That's reaching the level from where a turnaround is expected. It is very overbought level, 30 to 40%. That range usually leads to a pullback. Currently it is at 28 plus percentage. But if you observe this bucket analysis during market hours yesterday, it did cross above 30%. And I tweeted about it. I think day before yesterday, Thursday also it might have hit 30%. One of those Thursdays or Fridays, I shared a tweet showing that it is hitting the 30% overbought level. It is bullish but overbought. Why bullish? Because 79% of S&P 1500 stocks are above their mid Bollinger Band. That is bullish. Again, it is approaching 80%, so it is also overbought. The conclusion that we arrived at from the market ETFs study, that's conclusion, the overbought situation is seen from sector industry stock advance decline as well as from bucket analysis. Let's look at the market from some other angles from technical breadth perspective. This is from Q Finder. It shows the balance between bearish and bullish signals. I'm looking at the weekly interval first. All the categories, all signals, bullish 78%, strength signals again 78% bullish, trend continuation even more bullish 84%, and even reversal signals 69% bullish. All the categories in the weekly interval are showing bullishness. Is there any warning from the weekly headwind signal percentage? No, but it is reaching there. It's at 0.8%. Whenever this percentage goes to 1%, 2% or more, starting from 1%, then we are cautious. It is showing too many reversal signals in too many stocks. We are approaching that 1% threshold. That's a reason to be cautious. And if you remember, I showed just now QQQ has displayed a bearish headwind in the daily interval, and here we see many weekly bearish headwinds. And if I look at the daily interval, it's bullish but not as bullish as the weekly period. All signals 64%. Weekly was close to 80%. Weekly was 78 actually, and daily 64%. Strength signal 72%. Trend continuation Friday 68% bullish, and only one category is bearish, in fact, that is reversal signal. These reversal signals include headwind, include box, include reversal, bounce and touch. And we saw QQQ had a bearish headwind in the daily interval, and now we see that other stocks also had bearish headwind in the daily interval, and overall the number of reversal signals are more bearish than bullish. So we may expect reversal trades in stocks. I will probably not look for trend following shorts, though they may be there in individual stocks, but looking at this overall technical breadth, when all signals bullish, strength signal bullish, trend continuation more bullish, I will not look for trend continuation bearish trades. Instead, I may look for trend reversal bearish trades, because reversals are more bearish than bullish. A little bit of warning signal from the reversals, but not much. Technical breadth overall is quite bullish. Bullish in the daily and even more bullish in the weekly interval. Now let's look at the market breadth, the last angle that we use to look at the market using Q Global Market Breadth. Let's first look at the Mega Cap Top 20 Custom Index. In the previous webinar, we saw that Mega Cap Top 20 was inside a triangle pattern. It had a trend line resistance somewhere here, and we had the trend line support. On Thursday, it broke above the trend line resistance. Friday went up little bit more, but closed with an indecisive shape candle. So it broke out of the triangle pattern, showing that this week mega caps did better than the market, which is also shown by this relative performance line tilting up. Mega caps are strong, were strong this week. What about the broad markets? Let's look at the market composites. Looking at the market internals through the NYSE and Nasdaq exchanges. Nasdaq on the left, NYSE on the right. First, I look at the percentage of stocks above 50-day moving average. That percentage is around 55% for Nasdaq, 65 for NYSE. So about 10% better bullishness in NYSE. That was the same difference we saw in the previous weekend webinar as well. So NYSE is continuing to be stronger than Nasdaq. For both of them, yellow line is uptrending, and now for both of them it has crossed above the midpoint 50% level. NYSE crossed 1 week ago. I see this week Nasdaq also crossed the midline 50% line, and both of them are above their average levels as well. So as far as percentage of stocks above 50 MA is concerned, both Nasdaq and NYSE are bullish. If we look at the 3-month new high low, they are near the extreme levels, these extreme bands at the upper end, from where we expect a pullback. Not necessarily in the market, but at least in some stocks, this 3-month new high low never stay at the extreme level for too long. And you can see that when you look back at the other points, when it touched the extreme level, that almost inevitably led to a pullback in 3-month new high low. Does not mean it was always leading to a pullback in the market, but it was leading to a pullback in 3-month new high low. That means some stocks were coming down, and you can see here the stocks were coming down quite sharply. So we don't have to trade only the market index ETFs futures. Whenever we have 3-month new high low at extreme high, we may find out the stocks that are likely to go down and probably take them with Q reversal trade setups, which we could do at these points. Not shorting the market probably, but shorting the stocks that were giving reversal trade setups at those points. And we are at similar extremes again for 3-month new high low. That's a very overbought condition. That's a reason to be cautious. And I showed in the previous webinar also, if we change to weekly interval, I showed the bearish divergence in advanced decline and up down volume. That is still continuing, especially in Nasdaq. You see the bearish divergence in advanced decline and up down volume, whereas price is going up, these studies are sharply coming down. In NYSE, the bearish divergence is there, but it is less pronounced. It was more pronounced 1 week ago, but this week it went up somewhat, which did not happen in NYSE, in Nasdaq. So Nasdaq is showing weakness, and this is very broad study using Nasdaq exchange as a whole. That is weaker from NYSE from many angles. One is the percentage of stocks above 50 MA is about 10% lower than that in NYSE. Now we see the bearish divergence is very prominent in Nasdaq, not so much prominent anymore for NYSE. And now remember, we also saw bearish headwind in QQQ, that is a tech ETF. So we have cautionary signals, overbought signals from many angles, and more so on the technology stocks and Nasdaq stocks. Now let's look at market breadth total view, a breadth insight that combines the two exchanges and four major indices together. Again, I am looking at the 50-day MA percentage first. That is in an uptrend above the 50% midpoint, above the average line, bullish in every way. The actual percentage is about 67%, so that's quite bullish. The 3-month new high low is reaching the extreme level. When market is at a so high level, I am looking for reversal signals that will be distribution counts. There is none. That will be Hindenburg signal. There is no Hindenburg. Hindenburg on this chart appears as skeleton, human skull symbol. That is not there. And looking for possible phoenix or even bingo, but none of them are there. I see that Friday the total breadth market view created a doji candle. So that's a reason to be cautious, but that is not bearish yet. There are many cautionary signals we found from many angles, but not enough bearish signals. Having said that, market is overbought, so I'll be cautious about buying stocks. Let's look at some stocks that we could trade or we did probably trade using Q signals. I first want you to look at this stock Peloton, PTON. It had a sharp drop on Friday, drop of 36%. Now, the question is, are we going to short now? No, certainly not. Where could we short it last? And I will show that on the expanded daily chart. This is the daily chart of Peloton using Q entry chart template. And I'm covering all these signals in the Q master class. At this point, Peloton went up after displaying the bullish headwind reversal signal. So this headwind reversal, bullish reversal at swing low at lower boundary, after displaying multiple indecision at the bottom, that worked very well. It sharply recovered but stopped right at the trendline resistance that was coming from far away. Also, this up move happened with heavy activity shown by the dots on the activity bar, and it also had heavy pressure, bullish pressure. And right after that, price closed below the trendline resistance, and that gave us a bounce short trade setup. Bounce short setup does not need the candle color to be red or not even yellow, so long as we have a closing below previous day's close and it is reversing from trendline resistance after sudden sharp up move with heavy activity, that confirms a bounce short setup. So we would be short in Peloton at this point. Where could we short it next? That would be after this recovery, which incidentally also happened after a bullish headwind reversal signal displayed. What setup could we apply at this point? That will be one or two setups. Firstly, it will be a pull back, in this case pull down setup. Price was already going down, recovered to the yellow direction line and precisely reversed from there. So that was a pullback short setup. What other setup could be there? It was also at watermark level, came to the watermark level, and that same level had very high activity and pressure, came to that level, and then it reversed after displaying bear release signal. So we would also be able to apply the box short setup. Box short plus pullback short. When multiple confirmed short signals come, we are even more confident to short. So we could short at this point. We could exit the trade just before earnings if we traded it using stocks, or if we used options, we could hold it and we would have a much bigger profit. In either case, whether we use the pullback short setup or box short setup at this point, or we took the bounce short setup at this point, both of them proved to be very profitable. Now it is far below the boundary line, so we will not like to short now. The more you study the charts using Q signals like this, you will be able to anticipate and take a trade using the proper Q trade setups. Now let me show another stock, a gold miner, AU. I shared a long idea in AU, I think somewhere around this point. And I shared these ideas on my website, saganandi.com, always before knowing the result. And I remember when I shared the long idea, not many people were bullish in gold. Not necessarily that I was bullish on gold, but I was bullish on this stock. This stock gave a clear Q long trade setup. I think I shared it on this day or the very next day, one of those days. At that point, weekly displayed the bullish headwind signal. What I am covering in the master class are all these technical signals, and when discussing backdrop, I mentioned that when a stock comes down rapidly, and you know the stock is strong, AU is fundamentally strong as per Q vital scorecard analysis relative to other gold mining stocks. So if you were watching backdrop, then you would notice that first it displayed bullish headwind, displayed a bull release signal, the backdrop color changed to yellow, and then backdrop color changed to cyan. So right from that time, when the backdrop color changed to cyan, if not from yellow, you are looking for a buy setup in a stock that you wanted to buy anyway. And because I was doing that, and you are able to do that, you would be able to confidently take a long trade in AU on this day around this area, either of these 2 days. The exact time when I shared the trade idea, and this trade gave a very large profit. Half position or partial position may be booked at the upper boundary, and I explained in the master classes under which circumstances you may not book the profit at the upper boundary. When you see bullish move, bullish shape, bullish color, green color continuing, you may continue to hold, maybe until this day. In any case, even if you booked partial position profit, which is always a good idea if you are swing trading, the remaining position could be held and it would exit somewhere here probably using trailing stop. Now, why am I sharing it today? Because again, if you look at backdrop and entry charts, backdrop chart is showing that price had a reversal 1 week ago, and then this week price found support at the cyan direction line. So it's possible the cyan line will end up being the boss direction line that provides support as the stock continues to go up, if it continues to go up. And if it breaks the boss support, that's a reason to be concerned. But apparently we see that it has found a support at the boss line for now. The weekly backdrop is bullish. So even though price stalled at this level, backdrop color never changed. That's important. So the backdrop is telling that we are allowed to buy. Even 1 week ago, it didn't change. This week, certainly it is bullish in shape, color, both. And what happened in daily? Notice at the swing high, it displayed indecision at the top. So we would be cautious in the remaining long position that we initiated here. And we would also notice there were several indecision at the top signals. Then we had a bear release here. We had a bear release here. So for sure we would apply trailing stop that might be hit on this red candle. Then it came down. What happened at the swing low? I see three indecision at the bottom, which is a bullish signal. Three of them in a row. Then a bull release. And on Friday, a bullish shape, bullish color candle. Weekly is bullish. The next trend line resistance seems some distance away. So it will be possible to look for a buy setup in AU. When I shared it first, here it was fundamentally strong. Let's check its fundamentals today. Not that one. Using Q Vital, fundamentals are not so great at present. Initially, when I shared the trade, probably it was undervalued. This valuation color was in cyan. Now it has significantly gone up and the valuation color has changed to yellow. Earnings growth is negative in the quarterly period, though in the yearly periods it has very robust earnings growth. On Friday, the industry in itself was very strong. 100% of gold miners went up and it has a short squeeze potential. So fundamentals are not great. But let's look at the industry. Industry in itself is strong. We can see that 100% of peer stocks went up. Let's see the industry score relative to other industries. Gold mining industry was very weak earlier. Now it is much better than that. This allows us to take a long trade. Now, if you look at the industry rotation score here, you would now realize that when I first shared the trade idea, that time it was just shifting from probably one of the worst score industries to a much better score industry. I could catch it at the perfect time and I shared it on my side before knowing the result. Currently, I just did the live analysis. Industry is looking great, relatively speaking, compared to how it was, relatively speaking, and in itself great. Technically looking good, fundamentally not so great, but you may consider buying, especially if you think that market is overbought. Gold miners may do better. Now let's look at one stock more, Netflix. I discussed Peloton just a while ago, how you could short it confidently using unambiguous signals. And let's look at Netflix. In the master class, I explained that if you see 3-month big move up at pendulum low, look to buy. And if you see 3-month big move down at pendulum high, look to short. Market made new all-time high. But see what happened in Netflix. On Thursday, we had the biggest down move of 3 months when price was at extreme high, pendulum high in cyan color. That was in Thursday. So you could probably observe that on Thursday during the day and short it during the day itself. If not, you could look at the stock on Friday near the open and using fine-tune intraday chart, you could confidently short it because this signal, this is called one of the intensity signals, big move. The other intensity signal is pressure. We had bearish pressure also on Thursday and we had 3-month big move down on Thursday. Actually, we had those on both Thursday and Friday. Once we saw that on Thursday, we would be ready. We could short it on Thursday itself, or using intraday fine-tune chart, we could also short it on Friday. Let's look at the intraday fine-tune chart, and let me switch to 5-minute interval as we would use in the morning session. This is Thursday. I am not sure exactly when the big move and the pressure showed up. May not be right at the point of early range breakout, so I am not sure if we could take the early range breakout or not. But if I look at the Friday's move, early range high and early range low form, price opened slightly below previous day's low, so a small gap down move. Then price tried to go up but reversed from early range high. We had an indecisive shape candle, another indecisive shape candle, while price was reversing from robust intraday pivot, acting as resistance at those points. Those two indecision candles were still in bullish color, so you don't short. If we are using the technique of reversal from pivot, we could short on this red candle. I would like to have a bear release, but in this case it was a gap down move, so I was not expecting it to be overbought. It was a gap down move and it could never go above early range high here. So how can it be overbought? It cannot be overbought. So I wouldn't expect a bear release to come. I could short it right at this point. Again, the decision was not based on this intraday fine-tune chart. It was based on the 3-month big move down at pendulum high and also bearish pressure at pendulum high that came on Thursday, that kept me ready to short Netflix. And Friday we saw market made new all-time high, but Netflix could be shorted right at this point, putting stop just above early range high, or you could use the red pivot line. This was the risk. When price came to the early range low, the risk distance was already covered. You could book partial profit, and the remaining position profit you could book at the end of the day. I explained in the master classes that under some situations you may continue to hold the remaining position overnight. That is, if a short setup is confirmed on at a glance template at the close of the day. But that was not true for Netflix. If we go back to at a glance, it actually stopped right at trend line support. So we are not going to hold a short position overnight in this case. We could short it using intraday fine-tune chart right near market open and then book partial profit along the way, book the remaining position at the close. Will not keep a short position open when price is just at trendline support. Once again, the technical signals came handy to short Netflix, to short Peloton, and to buy AU at optimal price points with very low risk. And I will not go through many stocks today because I am thinking of the market this way. It is bullish, but it is overbought with few uncertainties at the top, one bearish headwind in QQQ. So I'm not willing to buy too many. Neither am I ready to short. So I will not probably look at more stocks today, but I will discuss the last 360-degree trade idea that I shared on my forum or website sagarnandi.com. All my ideas are shared at this point. This category 360-degree trading techniques ideas. Let's see which was the stock I shared last. Market was making new all-time high, isn't it? But what was the idea I shared last? It was Angie's list 4 days ago, November 2. Everything I shared is before knowing the result. That's important. After knowing the result, it's easy to point to a chart and say that you could use this system to make profit, but these are all shared before knowing the result. In a very bullish market when it was making new all-time highs, I shared Angie's list as a short setup, and this is how I analyzed it using Q systems. 360 degrees analysis, looking at all angles, interactive media and services. Angie's list ticker is ANGI. Its industry, it was very weak in relative score, and not only that, the checkered background is showing it was one of the 20% worst performing industries on that day, and I could see that in real time. 2nd November. Industry allowed me to short. I looked at the fundamentals. The stock was at that point down by 6%, medium valuation, very high negative earnings growth. So it was a one-star shorting candidate. In itself also, the industry was weak. 68% of peer stocks in interactive media services was down. Industry allowed me to short, fundamentals allowed me to short, and then I looked at the technical charts using Q at a glance. Bearish backdrop color in weekly, bearish shape allows me to short. Relative performance sharply coming down allows me to short. In daily, possible Goith flow short setup, bearish flow, bearish shape, breakout from triangle, bearish reversal. Plenty of bearish signals, intensity signals, momentum signals, breakout signals. The alternate chart, bongo turned red, mobo breakout, bearish mobo breakout from a squeeze with a bearish kahuna with 1 month biggest drop, biggest drop of 1 month on that day. So plenty of intensity signal, momentum signal, breakout signal, go flow signal, so many signals came together. On top of that, if you notice carefully, in the daily, remember fan in and fan out? Here 1, 2, 3, 4. In fact 5, I think 5. 5 out of 5. It rarely happens. 5 out of 5 trend lines came together. Sorry, not trend lines. 5 out of 5 direction lines that we have in Q systems, they all came together and then diverged, fanning out, fell down sharply. So that was a clear short setup. Was it guaranteed to make profit? No. But there were so many bearish signals and the stop would be narrow, stop would be just above the trendline resistance. So I was willing not only to trade, that's many people can trade in their own account, but I was confident to share it publicly before knowing the result when the market was doing new all-time highs. And how did Angie's list work out? I shared the short idea on this day. Then it didn't recover. It fell sharply, hit the lower boundary line, and you could book at least partial profit on Friday. That's how, if you use this 360 degrees technique, you are able to find not only long trades in bullish market, but even short trades. And the market might be bullish, but the industry was weak on that day. Fundamentally, it was weak, and technically, it had many bearish signals that gave me the confidence to share publicly. And once again, just like I shared AU, gold miner, when hardly anybody was bullish, that worked. And I shared Angie's list when market was making new all-time highs, that worked as well. Angie's list was on the short side when market was making new all-time high. Like this, you may find stocks yourself. I will not look for more stocks now. I will keep an eye on the market, and if I find some good idea, I may share them. I always share them. Not all the ones that I trade, but I shared some of them on the forum. You may keep an eye on the forum or my Twitter page. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in my next public webinar that will be next weekend. Have a great weekend, keep safe, and as I always say, as the examples I share show, no reason not to do that. Trade profitably. Thank you.